Hello dear friends, welcome to FinShappy. I am Ram. In this session, we are going to discuss diagonal calendar spread adjustments in a live trade. In the earlier session, I have discussed how to do adjustments in the diagonal calendar spread. I have explained what are the rules we need to follow, and I have explained everything using the back testing data using Afstra. So, in this session, whatever we have discussed in that session, if you haven't watched that session, please check here. You can watch that session before this, so that this session you can understand easily. So, in this session, our main focus will be how to implement those adjustments in the live trade. So, now let us, for those who are watching it first, I will briefly explain what is a diagonal calendar spread. In diagonal calendar spread, if you are following weekly, in the latest week we need to sell options from the middle point. We have to go 200 points, 300 points away. In both put and call, we have to sell both put and call. In the forward week, we take the protection. That is a bit from the sold strike prices, we need to a bit go away and take the protection in the forward week. So, this is how we construct diagonal calendar spread. Anyway, we are going to again see in the live trade and both construction and adjustments. Now, let us see the live trade. You can observe here I have added in the watch list both latest week and forward week. For latest week 17,100 PE and 17,600 CE. In forward week 17,900 call and 16,800 put option. So, first I will do buy transactions so that we will get the margin benefit. I am doing buy transactions for 6 lots. I have completed 17,900 call option buying, and I am doing 16,800 put option buying. I have done it. So, now let us do options to sold in the latest week. 17,100 put option with the same quantity. We have to use the same quantity for both latest week and forward week. So, for same quantity I am using 300 quantity. It means 6 lots. So, these set of 4 transactions are the basic strategy which we do. Later on, we may have to do adjustments for these transactions based on the market movements. I'll enter all these transactions in the Afstra builder so that we can actually track. We may have to do adjustments in coming days, so that we'll have to track both profit and loss, right? So, we may not see exact profit and loss in the abstract, for as we have to include adjusted transactions as well. So, I am entering all those transactions whatever we have just done with the exact prices in the Afstra. So, first of all I am entering sold transactions. Put option we sold at 17,100, the same price which we sold. I have entered. I am entering here. Okay, and now we bought for the protection. We bought on 16th September expiry, right? So, on the same expiry we have to enter both put option and call option. So, 16,800 put option we sold. I am entering the same price how we sold in the abstract, how we bought in the abstract. And we bought calls at 17,900. We bought it for 1950 paisa. So, we will enter the same price and at the same strike price. 17,900, same price is available here. I have added all those 4 options. You can observe the payoff chart here. I am just saving the strategy in the real portfolio because we have to track our entire trade with this, right? So, you can observe the payoff chart here. As long as we are in the green area during this week, we may end up with the profit, even though we may have to see little losses when market moves very steeply. You can observe here the break-even points. We are getting 600 points range. Okay, as long as we are in this range, we can end up with the profit. But this range also may get reduced based on our adjustments. Okay, so this transaction I have done on the 6th. Now today is 7th September. while market opening, we can observe here position in the Astra as well. Now I think we don't need to do any adjustment. Let us wait some time. If market moves very steeply either up or down, we may have to do adjustments. When prices are less than 50% of higher premium based on the latest week, then we will do adjustment. Okay. Now time is around 10:30. Market down around 0.4%. So we have to exit our call positions. As you can observe here, based on the latest call premium around 8 rupees that is trading, which is less than 50% of 22, right? So I'm exiting my call positions, both sold and bought positions. In that place, I'll take fresh positions based on the premiums of the put options which are trading now. Okay, put option premiums are trading around 2022. So around same price again I am executing the call options with the same quantity. On the 16th September expiry, I am buying around 300 quantity. Okay, so bought position is over. I am selling around. I am selling it 17th on 500 and 9th September expiry. So orders are placed. So first adjustments we have done now. Now let us again enter the same adjustment entries. We have exited earlier call options and we entered new call options, right? So we will enter all those exit positions and new positions in the Astra so that we can track. So exit positions, we have done modification here in the Astra and we have taken new positions in those places, right? So fresh positions, we will enter those fresh positions as well so that we can track entire trade using Astra. You can use your Excel or any other tool for monitoring, because these kind of trades may require many adjustments. So using our trading account, we may not actually track and we may not understand how much profit or how much loss we are getting. I'm entering all those positions and we bought 17 at 17 on 750. So that is also I'm entering 16th September 2021 for the 6 lots. I'm giving the same price, exact price, so that we can track exactly. Okay, I think here I gave 1 lot only. I'm changing it to 6 lots. So now you can observe the first adjustment we have done. You can observe the trade. We are seeing little bit loss now, 255 rupees. And after adjustment, you can observe that one more point, we have actually booked around 1000 profit. Now time is around 1 o'clock on the same day, 7th September. Market actually moved up from the down position of 0.4. It is actually moved to 0.3. So we have to do adjustment here. Now I have closed my put positions because call prices have gone up. Okay, put prices have actually gone down. So I have closed my put positions. So if you observe the call position of 9th September, it is trading around 43, right? So at that price, we will have to take put positions now. So I have already added those positions in my watch list. Now I am doing the transaction with the same quantity. So that is done. So this is second adjustment. You can observe that. Now we'll have to enter our positions in the Astra. That is for tracking purpose only. Okay, I'm doing these entries. I'm not showing all the entry transactions because it may take a lot of time. I have done adjustments and I have entered all those positions in the Astra. So you can observe now payoff diagram, and you can observe the break-even points. Especially break-even points gets narrowed down because we have done an adjustments both upside and downside. Obviously break-even points may get narrowed down. Okay, now time around again 1 o'clock on the 8th September, next day. Okay, next day market again fallen down, so we have to exit call positions and put positions value is actually showing far higher than call positions. Now I exited call positions. In that place, I'll have to take new call positions. When you observe the 9th September put position, it is trading around 54, but I'm not taking exact price of the call positions, because if I have to take the same price, it will become a straddle now, because one more day is there for expiry. I'm just taking a little bit 100 points below than these positions, but price may not be the exactly same. So I am taking protection at 17,600 strike price in the forward week with the same quantity, and I'm doing this transaction now. So I bought it 17,600 in the forward week for protection, and I have done the transaction, and now I am selling at 17,400 call option in the latest week with the same quantity. Okay, I have done this transaction. I'll enter this adjustment as well in the Opstra for our tracking purpose, so that we can understand how much loss we are getting now. I have actually entered these transactions. You can see now 2,600 loss we are getting as of. So let us wait some more time. Now time around 1 o'clock on the same day, market fallen down very steeply. So I am closing earlier entered positions, call positions. Again I am entering new call positions which are around exactly same point of where 17,300 put option in the latest week is there. I'll sell the same at the same strike price in the latest week. So I'm buying at 17,500, and now I'll sell at 17,300 in the latest week. So now our position will become straddle. Okay, so even after straddle also we can do adjustments if required, but in this session I'm going to do adjustments up to straddle only, because we'll end up with the profit by the expiry. Okay, now still our position in loss only. I'll enter these adjustments again. This is the fourth adjustments we are doing. I'm entering all these positions here. I have entered all these positions. You can observe the graph, like it is showing like a straddle, right? Our position showing 4,800 loss, and break evens also narrow down around 200 points range only we'll have. Still one more day to go for expiry. Let us see if market is there in between expiry, we'll end up with the profit. Now it's an expiry day. While market opening, you can see the position. As market is very flat today while opening, obviously we will be in profit. We will see Opstra position, as we spent around 3 lakhs margin for this trade. So it would be better if we can get at least 1%, even after all these adjustments. If we can at least 1% profit, we can close this trade. I am closing this trade around 940, as I got more than 3,000 profit. So once we will enter all these transactions, last trade transactions, we can able to see how much profit we got, exact profit in the Opstra. So I'm entering all these positions, last trade transactions. I have closed at 39, and I'm entering that 39 rupees for call sold position. And for at the same strike 17,300, we also sold put at 31. Okay, for call bought position, I'm entering at 17,500 for the forward week. So I have entered that position as well. Put sold at 31 rupees at 17,300 strike price. I'm entering that position. And last position, put bought at 17,000, right? 17,000 in the forward week. I'm entering that position as well. So we have updated all the exit positions information in the Opstra. Now we can see a total profit 3,354 rupees we got for this weekly trade. So this is a very good trade. We have seen up to 4,800 loss also, right? We could able to convert that loss into profit by doing proper adjustments. We have done adjustments 4 times. Maybe brokerage would be we have to pay around 500 to 600, but we could able to convert this loss trade to profit. And if we do more, this trade with the more lots, we could actually can earn a very good amount. So this is how we can actually do adjustments in the diagonal calendar spread. Hope you got very good clarity. One more small announcement, friends. If you wanted to subscribe for Opstra, you can use this coupon code and get 10% discount from the Opstra subscriptions. Hope you got very good clarity how to do adjustments in the diagonal calendar spread, and so that we can convert our loss position into profit. Hope you got very good clarity from this session. Thank you so much, friends.